We have some speakers on, and we'd like to start speaking to them as well. I can see Arvind Sanger there. Arvind, let me begin with your take. Der aaye durust aaye is what they say in Hindi terms, and I think that's one way of looking at it.
Yeah, I think it's good that this deal finally came, and it seems like it's come on very solid terms from an India standpoint. It puts it at par, if not slightly better than many other exporting countries in Southeast Asia and in Asia in general. So I think it's good. I think, there's an old saying that a crisis is a terrible thing to waste. And it's good to see that during this mini crisis, if I may call it, this whole tariff war, India has rationalized and lowered its GST and has signed trade deals with the EU and UK. And so all of this has been a catalyst for India to take steps that are going to stand it in great stead going forward. So I think the most important thing I look about it, this was the, I wouldn't call it the icing on the cake. This is the most important part of the cake. But the reality is that with this and with everything else that's happened, India today is in a much stronger position than it was going into this tariff situation in terms of what it has done to itself to make its position stronger. And that's what's most encouraging about this.
In some sense, Arvind, one thinks of it that aside of the fact that how it impacts the market, so on and so forth, the fact that India's tariff outcome is a slight advantage to the ASEAN neighbors as well, even if it's come with a bit of a delay. And it comes on the back of a few other very important trademark deals done or landmark deals done with other nations or other regions, is a big boost for GDP growth as well for the whole of 2026 or FY27, the way we like to call it in India. Well,
look, India is not an export economy like the Southeast Asian countries. So let's put things in context. The biggest exports from India, petroleum, electronics, software, were not impacted by this and are not going to change. But some of the employment-heavy industries like textiles, gems and jewelry that benefit from it clearly will help the economy. I think the more important impact is going to be psychological. The animal spirits, the confidence in the economy and the economic outlook, and the possibility that the Make in India gets another boost because now you've got access to the US market, you've got access to the EU market, so somebody looking to set up global manufacturing in India is much more confident about that. So I think in that sense, yes, fiscal 26 and the economic fundamentals, again, with the GST lowering and all of that, were already starting to look better. And I don't pay attention to the GDP numbers because there's a lot of things that I don't understand in the GDP numbers. I look at the earnings growth of Indian corporates. And the earnings growth of Indian corporates, whether it was 8.2% GDP or lower GDP, were disappointing in the last few quarters. I think that we should start to see the top line and the bottom line of Indian corporates in 2026 calendar year look much healthier as we go through the year. And this deal will help only further that, both in terms of the jobs that are created in these export industries looking better and in terms of business confidence improving. So I think in all those fronts, it's setting up for a good FY27 for India.
Absolutely, and some of those numbers already starting to look good. Good morning, gentlemen, and thanks so much for taking the time. We've got Jonathan Bharat, Chief Investment Officer, ETO Markets, as well as Gaurav Sansanwal, who's fellow at CSIS. Jonathan, allow me to come to you first. And I'm also looking from the perspective of the foreign institution, and they are, as things stand, as of yesterday, 88% short in the Indian equity market. And I'm just wondering whether, at least in the short term, there is going to be a dramatic shift, just purely based on the sentimental change that has taken place with regard to India, and also the impact of the currency. Because if I look at from the 6th of August last year to now, India is one of the, if not the worst performing currencies. It's down about 4.3% from that point. And one would assume that on a sentiment basis, the currency also improved. It's a great opportunity for foreign institutions to deploy.
Look, I tend to agree with you. I guess when I look at it, when I look at the tariffs, remember There used to be 2.5%, now it's 18, and it moved up to 50, and now it's 18. I think tariffs are still a handbrake on any economy. But what I do think India has done well on this is she has breached out and done deals with the EU, and to me that is important because she is spreading her network out. So I do feel that that's a very, very positive thing, for India on that she's dealing with more people, particularly the EU, and I think that'll only bode well. I also get a sense with the currency, because it's been so weak, that's certainly going to help with the export side of things. So I'm encouraged by that. So overall, I get a feeling that the international player will look on India, because there are more concessions, as more of an investment. And I think you'll find a little bit of a turnaround in that sentiment. We've always liked India in terms of, its growth, its middle class growth, as a market. And I think that's going to continue and or accelerate. I do want to see growth, and I do want to see good growth and good returns to companies to employ the right decisions to go back and increase investment in India.
Okay, I want to get Gaurav in as well. Gaurav, how are you looking at the contours of the deal, and what are the details that we need to now see? We know it's 50 to 18. We know from what Trump has claimed that India will stop buying Russian oil and possibly buy Venezuelan oil. What more do we need to find out to understand exactly how this deal is going to be effective?
Well, Tamanna, I think I agree with Arvind and Jonathan. Whichever way you look at it, I mean, European Commission said that the EU deal was like the mother of all deals. But let me just say, I mean, this is then the spine of the family, because between US, EU, UK, Australia, Gulf, you are looking at over $1 trillion of annual commerce. So irrespective of where this lands, this is a big moment. But I think the details to watch out for are, I mean, firstly, the labor-intensive sectors were really impacted by this. That includes textiles, gems, and jewelry, auto, and they are likely going to benefit now, right? And I think from India's vantage point, India maintaining that edge over Bangladesh and Vietnam in a stable way over the next couple of years would really help India get back into the game in labor-intensive industries, which is really important. We just saw in the budget the announcement giving a tax holiday to data centers. So in capital-intensive sectors, India has been reforming, and that's starting to India is starting to move from like a back office to like being more at the forefront of the capital-intensive service industry. But on the manufacturing side, where India's been a bit stagnant, I think this deal has the opportunity for India to unlock labor-intensive sectors because it is doing better as of now relative to Bangladesh and Vietnam. So I think, yes, details about who benefits from an India perspective, but also the fact that the levels remain the same for India's other competitor economies is what will give India the edge. The last thing I will say is, economy is one aspect of the US-India relationship. What this does is it stabilizes relationships between two growing emerging partners, and that has benefits for India way beyond the economy as well, as India starts to think about its strategic relationships, as it starts to think about benefiting from frameworks like Quad from both a market perspective but a security perspective as well. So I think this is a good day. India is doing everything right in 2026, and let's hope that this gets closed in the next few weeks.
Absolutely. And of course, the fine print is going to have to get combed over, as the EU deal is also getting combed over the next several months, one would assume. But Arvind, I just want to get your perspective on the global setup at the time that we're speaking today, which is there are a few signs that some of those AI trades are maybe unwinding. And I'm just wondering whether that leads to the possibility of a higher momentum into India, because it missed that AI bus completely, so far at least.
Yeah, I think the AI trade was very much the dominant trade of 2025. I do not believe that, AI tree can grow to the sky this year. There'll be a lot of news on AI. AI is not going away. But in terms of trade, if you look at the performance in the first few weeks of this year, you've seen the Russell 2000, the value stocks, the small cap stocks starting to outperform the AI darlings. You've started to see sectors like energy and others who had lagged last year starting to outperform. So I think, you're seeing that even in the US market, and you're starting to see it on a global, I think you will see more of it, that people will realize that what matters is growth, not hype. And to the extent that India gives growth, then it should benefit. And it'll not just be I close my eyes and I buy AI because I know there's going to be growth. It'll be show me the money, show me the growth, and I'll put my money. And I think 26 will be the year of that. And in that sense, AI hype will not get people valuation just because they're quote unquote AI companies. The companies that are able to show top line and bottom line growth will be the winners, in my opinion, as some of the euphoria on AI fades. And there may be some companies in AI that may benefit, but in a broader market sense, it will not be a close your eyes and just make one trade to one decision trade.
I was just thinking what Gaurav said, that the EU-India FTA is the mother of all deals. And what do we call this one? Is it the grandmother of all deals? But Jonathan, I wonder if this fundamentally changes the FII view when it comes to India, or will we see this also take time? Right now, a lot of FII sitting on shorts. They will probably have to come in and scramble in today. But do you see India as a market and an emerging market play becoming much more attractive after this deal significantly?
Oh, look, I think so, because India is spreading its risk, to other markets. So I look at that as a positive thing. Yes, there'll be a little bit of scramble in terms of short covering, but I do think that investment in any investment anywhere in the world has to be shown on the return to investors. So you can have growth, but you need to see that's got to be profitable growth. And I think if India is showing that because she's got larger markets to deal with, and that growth and that return is there, then I think you'll find that foreign investors will come back and will return. I also get a sense that because there's a different tune in terms of imports, so for oil and and sort of disregarding some of that Russian crude, then it also is quite positive. So I think the foreign investors will view it, particularly from the EU and America, in a positive limelight. And I do think that some shorts will be scrambled. But the proof is in the pudding. Let's give it a little bit of time for the dust to settle. And then I think you'll find more investment will come.
Okay, just Arvind, weigh in on a little bit of uncertainty on the US side with regard to the monetary policy and how that impacts global trade. Because you have a new Fed, or you will soon have a new Fed governor, I wonder whether that changes anything from the perspective of flows and how that relates to trade in India?
Well, remember, the current governor is going to be there till May. So nothing is going to change in the trajectory of what was happening. When the new governor takes over, you're not going to see any dramatic changes. But one of the things that's different is that the incoming governor is a little bit less fond of using balance sheet, but more willing to use interest rate policy. So this becomes a little bit, as they say in Americanese, inside baseball. It's not that relevant, and I don't think we should worry that liquidity is going to dry up under the new governor. So if liquidity is not going to dry up in the new governor, then I think that the idea that that is going to make any fundamental differences to flows, I don't think we have to worry about that. I think there are a lot of other macro things that can go wrong, but I don't think the new Fed governor is going to cause any major change in liquidity availability. If anything, I suspect he'll be a little more dovish, but I don't think hugely so.
Gaurav, Arvind, we'll leave it at that. Thank you so much for coming in.